Is your trading still super complex? Then listen to this video and I show you that trading is not complex. It's boring and simple. If it's entertainment, you have to pay for it. So let's deep into the video and let me show you what I have for workspace. So this is ATAS, the normal classic version. You can see here these two heat maps. I have the 3D mode activated, blue bubbles for aggressive buyers, sell bubbles, gray. Then you can see here the limit orders, gray and blue, and then with a yellow shadow, which is kind of nice for my eyes. And then here the same as well for the NQ, the 3D mode, the volume here, the CVD. It's pretty simple. You can also just use this for the video. I use the 3D mode to give you a better picture here. And I think the settings are very mint, clean. So yeah, this is the first example. I use this heat map for the liquidity, so I can see, okay, where is the interest in the market, and where do we get spoofed. So spoofing, for these who don't know, is when the market, for example, is down here at the low, and then the market maker or whatever is putting in some liquidity at the top. For example, here, let's say this is a spoofing order. The market is down here. The spoofing order, for example, has 1,000 contracts. Okay, the market sees that as a magnet point, and then the market goes up to it. And if the market comes close to it, the market maker pulls these liquidities out of the market. So he has what he wants. The market is at this point here, and then he pulls out the liquidity, which means he's not interested in passive selling over here. So this is a spoofing order. For example, I use that. I also use it as a normal heat map. For example, here you have the liquidity, and okay, I look where do we have most of the liquidity laying down, and for this example we have it here at the 7,500, which means it's a first of all, it's a magic number. Algorithms are like programmed onto these magic numbers, so it's a highly rejecting area where the market can either reject or just jump through. As you can see here, for example, the market didn't even had the chance to even get close to it, and then maybe got absorbed here. These buyers put in some aggressive work and then pushed up the market again. Yeah, so this is the heat map. I use it for my trading when I'm inside the trade, for example. Then I'm looking, okay, where's the next interesting zone where I can exit the trade or enter my trade. For my trading, I mostly don't want to wait until these levels get broken. I want to go out of the trade before the market gets to these levels. So I basically put my I take profit 1 or 2 points before, and then I'm safe to then I'm safer that I get filled, because sometimes they come to these positions here and then they get scared, or I don't know, the spoofing is happening or whatever, and then the market jumps back up. So that's the more safer process for my trading. And you can see here almost 100 contracts get pulled out of the market, so he's not interested in passively buying at this level here again. Maybe he's putting some liquidity over here and a split, I don't know. But yeah, so this is basically the heat map. When I enter the trade, for example here, I aim for these areas of liquidity, and then I put my my target profit close before the liquidity gets hit. So then we come to the NQ stack. You can see here I have an execution chart. This is the 900 tick chart, the big trades, and then I also have the market matrix, which shows me the bias of the day. Pretty nice, pretty simple, so I don't have to calculate it in my head what the bias of the day is. And you can see here the marker got triggered here. Of course, I wouldn't trade this marker exactly. I would wait for a confluence inside my or for my trading knowledge. So I basically would do this and this, the high and the low of the accumulation zone, and then when these accumulation zones get broken, you can try to short here. You have to consider, okay, is the CVD also showing me interesting signs of aggressive sellers or not? In this example, you can see that aggressive buyers came in here again, and there's no sign of aggressive selling. So then they just grind it down a little bit. There's a balance between the seller party and the buyer party. So you wait for the opportunity to come again. Here you can see, and still the bias is short, so you don't look for any like reversal trades. You can, but then it's a scalping method. I only trade with the bias. And then here, of course, you can see here this perfectly designed setup. So you have the breakout. This is a fake breakout. They come back inside the area. The area doesn't get traded above here again. So the sign of going down even more is in a higher probability. So you can also see this here in the CVD. It's in a balance phase, so it's not, the aggressiveness of the sellers is not strong enough, and the buyers also not strong enough. This was the chance for the buyers, but of course you have maybe you can see it in the heat map. Let me see. You have some, oh, I can't see because I didn't load the time. So let's get back to it. The NQ here. Maybe at this point the passive sellers were too strong for the aggressive buyers, so the aggressive buyers couldn't get through these levels here of balance again. And when you do this, okay, you can also see, okay, we have a high volume area here, and this is where exactly the sellers stepped in again. And as you can see here, this is the entry, 260 ticks. Is not the perfect breakout setup or scenario, because there's not much momentum, and as a breakout trader you want to have momentum. And here also you can see it, breakout, reversal to these areas, and then aggressiveness came in. You can see it in the CVD as well. And then yeah, as I mentioned, you look for areas where the market can reject again, and for that you can see it here on the right side. This is the daily chart from the NQ. What I do here is I look for these closing points and opening points, and then you also have the high volume node here, so I can do it as a area here. So this is an interesting zone for the NQ, and if I make these areas here global, you can see it here. Let's make it a little bit sharper. Let me show you. So this is the first point you have to look at, and this is the second point. Okay, and because these are the volume edges, and after that you have low volume, so the market can run basically through these areas because there's no interest in buying or selling. So the next point would be the point of interest here, which is almost the high of my 14 and 15, 26, and so this would be the next target if you still inside the trade here. Then we have also the 1 hourly chart. So this is the monthly volume profile with the daily chart, and this is in the 1 hour chart the weekly profile. So yeah, you can also do this, aim for the weekly profile edges. Here you can see the rejection of this area here again, and when I go back, maybe I can see some signs of no, okay, I can't, because we are making new all-time highs, and there's no reference for that. But you can use that also for the analysis, like these areas of interest here, the high volume node, then here also the edges, also with the high volume node. When you see this here, this precisely, so you can see here the areas of rejection, also here rejection, rejection again, also rejecting, then they broke through these areas of interest, came back to it. And then what you can do here is make look for the high, for the all-time high, and then mark this also, and you can see here they didn't come through it, then it acted like a support, and then the market slowly failed to make new all-time highs, and now it's coming back inside these areas where aggressive buyers came in. You can see it here also. Here, these are rejection points of buyers, so buyers stepped in aggressively. You can see it here with almost 1.4 ticks, and here also aggressive buying with almost 2,300 ticks. So these are the areas of aggressive buyers. So, and this is how I basically look for my locations where I can exit my trades, enter my trades. Yeah, basically that's it. So as you can see, trading is simple and boring. You can spice it up with option levels. You can spice it up with not delayed indicators like the market matrix for the buyers. You can use the big trades. You can see aggressive sellers or buyers. You can see them here right now. And for example, if you use the big trades indicator, and for example we have let's say 90, and maybe the chart will show me these big trades. Okay, this is too much for my trading. So I'm going back inside the settings and have it like I only see a few of it because I only want to see the biggest fish in the market. So the biggest whales that's inside the market I want to see, and then I want to see, okay, do they have the chance to go even further, or do they get absorbed by passive buyers at this point here, right? Because when we see something like this and the market goes up, you have to see that, and then the market can go up again. But when aggressive sellers step in and the market is going even further, then you know or have a higher probability that the market is going to drop down again, as you can see here. But if there are many sellers, aggressive sellers, but the market is not moving down, like in this scenario, then of course they get absorbed. And absorption is always a good sign of a reversal. Maybe I can find a good scenario. For example, this, okay? Liquidity was laying down here from passive buyers, right? They come down here, aggressive sellers, they come down to this area here. Let's say liquidity was laying down, of course, in the limits. Aggressive sellers, which means they want to push the market down or exit their shorts, which makes maybe no sense here at this point, but they want to push the market even further down, or get filled in for the long side as a passive buyer. So then you have to take a look, okay, what's happening at this point here then? As you know, these sellers here now get absorbed and aggressive buyers step in here as well. So then also aggressive sellers try to even push the market down again, and you can see it, the market didn't even react to this point, and then passive buyers stepped in, aggressive buyers here in the CVD tried to push it up, and then the market here of course went almost 1,000 ticks, and also here inside these areas they are probably mostly sweeps of the sellers at the bottom here. I can imagine, but you can see it also here, like 2,000 contracts, and the market is not even giving me like stupid amount of ticks. 300 ticks in this environment right now, it's not much, right? So you have to be patient with these things. So when the market comes back to the areas of aggressive buyers, and you can see it here in the CVD that there is not much aggression, the market probably is done over here. Okay, so when these areas get broken, the sign of aggressiveness inside these buying positions is not there anymore, which means we have the potential to test levels from the past, right? And the level from the past could be this one. And you can see here also they accumulated at this area, right? Also here, accumulation, rejection to the upside, 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 and then we have these areas here. So this is basically how you use the big trades. If you didn't catch it for the first time, you can rewatch the video. I think you have a good probability of learning something here. And let me show you also my ES stack chart. So it's basically the same. We have the daily chart, the monthly volume profile, and then we have the hourly chart with the weekly profile. I use it the same way as the NQ, and if I inside the correlation scalping or whatever, you can use it like that. And yeah, so this is basically my workspace. I will link you my workspace inside my Discord. And then I also going to link you the heat map, so you can use it as well. Everything for free. Join the Discord so you can download or get the workspace I'm using right now. If you're interested for the market matrix, you can test it for 5 days. So it's a good opportunity for a 5-day trial period. And then if you like it, you can use it for a little penny. But let's be honest, this trade here would make you so much money that you didn't would notice that you have something that costs a little bit, right? Because the marker was triggered here. Of course, you don't buy it or sell it at this point. We wait for the location. Okay, the location was here. They faked out this area here. Come back, faked out again. So we have the second entry here, and then boom, track it with your daily channel or daily chart. Maybe the options level as well, and then you can manage your trade, and that would make you like almost 1.2k ticks today, just today, in 30 minutes. Easy money, I think, and you can trust the channel here. But of course you have to manage your trades. Don't blindly just hold and leave your chart and then come back and lose some money. No, you trade, manage your trade actively, and then you have a good edge for the market as well. This would be the video. If you have any questions, just put them down inside the commentary. I will be there. Also, you can join the Discord. It's for free. Get the workspace. I will link it inside my Discord. If you're interested in testing the market bias, the market matrix bias, then you can find the link also down below in the section. Also, you can have the link for the heat map, so you can use the heat map as well. So you don't have to buy bookmap as well. So you can save money. Yeah, so as I mentioned, if you like the video, give me a thumbs up, leave a like, leave a comment, subscription, and then we will see you in the next video. Bye bye.